Alright traders, I'm back again with another video, and this time I want to take some time to talk about fractals just a little bit because basically I trade with the fractals, and I always mention fractal levels, fractals, and you hear that from me a lot, and you may not know what it is, and then you get confused. Basically you can look at fractals as swing points, swing highs and swing lows. That's where the market basically makes a change of direction. So that's why fractals are important in the trading that I'm doing. And also the fractals, they form support and resistance levels. So we'll get into that. Fractals were probably made famous with the trader Bill Williams, and he traded a chaos. His trading technique was called the chaos theory, and that's where I started trading with. I started using fractals and trying his system out, and I didn't really, I don't know, I just didn't really get into that style of trading. I liked the fractals a lot, but I didn't like everything else. I didn't like depending on these indicators that he was using, so I didn't continue that way. But I saw a very, very good thing with the fractals, so I wanted to keep those in my trading because basically fractals are part of it could be shown in trending markets or consolidated markets that are ranging, because fractals make swing points. So when a fractal bounces off of a ranging level, you'll see that. So if it bounces off that high range or that low range, you'll see that fractal level form. And then also when the market's moving, trending, you see those fractal levels. So we'll get into those, and I'll show you that and what I mean about both of those situations. But basically a fractal is a formation where the middle candle or the bar is the highest high or lowest low, and it's preceded by two higher highs or two lower lows on each side, depending on if it's a bearish or bullish fractal formation. So the bearish fractal formation is a formation where the middle candle is the highest high and has two lower highs on both sides. So it can be the highest high is going to be by the wick, not by the close. So you're going to see the high wick, and then the next candle's wick cannot go higher than that middle candle, and then the next one after that can't go higher, and then the one prior to that has to be lower also, and then the one next to that lower. So I'm probably confusing you with that, but if you take your hand and you look at your palm, put your hands together and look at your palm, then that middle candle would be your middle finger, and then the two candles next to it would be the candles on each side of it. So the candles on the left would be the two candles on your left side, and then the candles on your right would be the two candles on your right, and then that would be the formation where your middle finger is. And basically that's where it is. Your index finger isn't higher than your middle finger, and then your thumb isn't higher than your index finger, right? So that you just look at the palm of your hand, your right hand, and you can see that. And you can do that with your left hand too. It's the same thing. It's going to be a fractal formation, but then we have that in the market. Now a bullish fractal formation is a formation where the middle candle is the lowest low and has two higher lows on both sides. So let's show those. So here's that bearish fractal formation, and then here's the middle candle, and you can see this is the high part right here. This is the highest high, and then there's this high here is not higher than that one, and then there's this high here, it's not higher than that. So we have a fractal developing. So when we see the market and we don't see these candles, and then we see this next candle, and then it closes and it doesn't have a higher high than that one, then we know we need one more candle, and it will be this one. This high is not higher than this high. So this is going to be a bearish fractal because the movement is downwards, but when we trade it, it's a bullish fractal, and I'll show you that. I don't want to get you confused with anything, but just know this is a bearish fractal whenever you see that formation. And then most trading software has fractals in it. You can have them formed, and it'll show you where the fractal is, and that's what this is doing. This is putting the fractals in prior. I don't do this. This is where the fractals are coming in from the trading software. Now you can see here, this right here is a bearish fractal, because you have this middle fractal, then this one's not higher and neither is this one. This one's not higher and neither is that one. And then what does the market do? It drops down. Alright, so a lot of people sometimes they trade it like this. You have this fractal, this is the fractal, but this fractal is not going to develop until the end of this second candle. So this is lagging. So basically, if you try to trade the fractals, and that's what I started doing in the beginning before I ever traded Ichimoku, I would trade after the close of this candle here. I would go short, put my stop up here, and then I would ride it down here. But see, the thing is, you don't know where this is going, and then it can, after this candle, it could go down here a little, then pull back and break that level. So basically, you had to know the trend, and you had to be going with the trend, and it became quite confusing. I didn't do as well as I wanted to, so I started to find other ways, and that's when I ran into Ichimoku. But there was some things still about fractals that I still loved. I loved the support and resistance, and I loved that when a fractal level was broken, I could get into a trade and know that I was trading with the trend basically. Alright, so this is a bearish fractal. You can see them on the chart here. All of these where the red arrows are. I put this one here to distinguish this one so we could definitely look at that. So here is a bearish fractal because this high and this high are not higher than that one. This high and this high are not higher than that one. And remember, it's not the close or the open, it's the wick. Let's go to the bullish fractal. So here's a bullish fractal. You could see this low is the lowest, and then this low, and then this low. Do not exceed this low. These two lows do not exceed that low. So it has to be the 5 candles. 1, 2, 3, 4, 5. Alright. Some people use the 3 candle formation, which is not as accurate. So it will be 1, the middle candle, and then 2. 1, the middle candle, and then 3. I have to learn to count still. But it'd be 1, 2, 3. That's not as, I use the 5 formation. I think that's more accurate. I think it's basically noted that usually it's the 5 candle formation, but I have seen people using 3 candle formation. Some software, when you even open it up, lets you use 3 candles. So if your software asks you between 3 or 5 candles, go with the 5 candles, and you'll see this is it. 1, 2, 3, 4, 5. Here it is again. 1, 2, 3, the middle, 4, and 5. So these two here don't exceed this low here. So they're making these lows are not as low as the middle low. This high is not as high as the middle highs. So that's where you get the bearish. The bullish, the lows aren't as low as the middle low. Alright, so now if I'm trading this is going to be a bullish fractal for me, because I'm going to wait for this level to get broken, and then I'm going long. Because once this candle here breaks that level, this level didn't break it, but then this one broke it and closed, I get into the trade, and then I go. And see, that's bullish for me. Bearish would be if the price came down this way and broke that level, then it's a bearish fractal for me. That's what I'm looking for. And these levels are strong support and resistance, and you could see where it is right here. Let me go to another one and show you. You could see the fractal levels. All these levels, it's fractal resistance levels. All these levels, fractal support levels. The market was ranging in this area, and that's where I was talking about. Here's some, you could see this comes up and it makes this fractal. So where would you trade this to? You have to wait for this candle to close, and then you have the fractal. This isn't going to show this fractal until this candle closes, and then you get in on that because you see the fractal develop. You put your stop loss above that fractal and you ride it to the range support level. Okay, so then you would ride that right to the range support level, and then on the bounce, now see, this would make it too high here, this one, but you're bouncing off of this support level, because you made this fractal, and these two right here weren't lower. So then the fractal developed after this. Now here's the fractal after this candle closed. So you would get in here. Your stop loss would be way down here, but this candle was too big to get into that trade. You're halfway through the range already, but then you would ride it up to here. So a better one would be this one. This is even far. Yeah, these fractals are far. I wouldn't get into the trades with these bars making the fractal level that far. But now say this fractal here on the range here. Now we're trading the range. If this candle came, closed here like it did, this candle closed here, and then another candle closed maybe here, then you could get in on this candle close here instead of way up here, and then ride it to the top of this range. Alright, so this is that range trading, and we'll make a video and get into that more, range trading, because always the market is probably ranging mostly like 70% of the time, and Ichimoku is for trending systems, and if the market's only trending 30% of the time, then a lot of times we're not able to get into trades, or our trades don't work because we're in a range and we think we're getting ready to trend, but we're not. So then the Ichimoku doesn't work for you, and then you say, oh, the system's no good. Yeah, the system's good. It doesn't work in a ranging market. All right, so that's where you see that, and we'll talk about trading the range even with the Ichimoku. I'll show you how we can do it, but it's going to be a little different than the regular rules. Okay, so let's get out of here, get into a chart. So the reason why I trade these fractals is, you can see this is a bullish market. Now Ichimoku, we're using that just to let us know where our support and resistance is, and to get our signals, and to get confirmation with Chiku span. But here's a level right here, this fractal level. You can see the fractal. This is showing that this is a bearish fractal, I mean a bullish fractal. That's why it's green. Okay, and the reason they're showing it as a bullish fractal is because we're trading the breaks of these fractals to go long. So my level would be here. This is the fractal level right here. So we put a line there. And you can see why it's a fractal level, because of the rules that I told you. And then price breaks it right there, and then you get into the trade. Alright, and you see what it does. So you miss this one, then we look for another fractal level. There it is. Price breaks that level. There you go. You miss that one, you look for another fractal level. Breaks that level, and there it goes. You miss that one, you look for another one. This is what it does while the market's ranging. While the market's trending. While that market is trending, it's going to make these fractal levels, because it's making swing highs and swing lows. So whenever it makes swing highs and swing lows, it's going to make fractal levels, even when it's not really. You can see it's starting to range right here a little bit, but it's still making fractal levels, which is going to be a support level for the range when it starts ranging. But you see it breaks that level, and there it goes. And so now we keep doing that, and we're looking to break this level, and then that doesn't happen. So maybe we're going to start the range, right? And if we say that, okay, back here it happened here, but if we're looking here, it didn't happen all this time. So we feel we're in a range, and we put another candle, another line there, and then this would be our range, right? And so now we're looking to break out of that range, and the the clouds right there at the bottom of this range right here, and if we break out of that, we can go short. But it doesn't break that way, it breaks the long way. Now we're not trading the fractal level here, we're trading the cloud breakout right here. So this would be the cloud breakout, but now you have to be aware of this level and know that we can break that level and get pushed back down if we don't break that level. So here on this little candle here, you would have thought maybe if it doesn't close above that, it may come back down and then stay in this range, but instead it moves and moves on, and it's where it is now. And see, you could see another break of this level, but the market seems to be slowing down now. Now looking at this euro yen pair, you could see where it stayed above the cloud and broke the cloud in September 2012 and hasn't been below the cloud until what's that, April 2013, and then stayed above the cloud. We just broke for one day, so it's been above the cloud mostly like almost a whole year. So now we have to see what's going to happen with that. That's the euro yen, something to keep in mind. But traders, that's basically it. That's fractals, trading fractals, fractal levels. Just wanted to make it clear what the fractals are, so that when I'm talking about fractals and we look for trades and we're looking for trades off of the fractal levels, that everyone knows what we're doing and knows what we're talking about. So basically that's it right there. And I guess I'll be back with another video, and until that time, hope you guys are learning something, and God bless.